Hey guys, okay, so we're going to continue with 2022's accounting paper 1 November exam, and we're going to pick up where we left off, but we're going to start with 1.3.2, the equities and liabilities section of the statement of financial position or the balance sheet. So I've completed the format over here, and if you look at the answer sheet, it is approximately the same, and we're going to see what we can do. They have given us ordinary share capital. Okay, so now we're just going to fill in everything that we can according to the information given. So if we look at what they have given us, the details here have all been filled in. We've done most of these things in the income statement already, so it's only this section that's left. So I think we can start actually with the income that has been received in advance here. Now, income received in advance is a liability which is going to fall under trade and other payables. So we know over here we can enter trade and other payables, and the amounts they've given us so far will basically be about creditors control, and that is 428,000. And then we can look further. Now we've already calculated what happened with the rental income, and we can just pop back to our income statement quickly. The rent income, and we know it was 12,150 Rand per month, and it was for 2 months, so we can just use that. Now remember the adjustments. If it's income received in advance or prepaid expenses, in the income statement they represent too much information. So in the income statement we will subtract to get to the correct amount. But when you are adding it to the notes to the balance sheet, we're going to add. In the same sense, accrued expenses and accrued income represent information in the income statement that is not enough. We do not have enough months to come up to 12. So in the income statement, the adjustment is also a plus. But in the balance sheet and the notes to the balance sheet, still a plus, because those items are either assets or liabilities. And what are you doing? You are creating this asset or this liability. So therefore, in the notes to the balance sheet or in the balance sheet itself, it will always be a plus. So now we're going to say plus, and that was 12,150 multiplied by 2. And then we can look at income tax. So it says here income tax for the year is calculated at 30% of the net profit. The net profit after tax is 356,300 Rand after adjustments. Okay, and we did calculate our income tax for the year, which was down here, as 152,700. Now, regardless of whether your answer is correct or not, make sure you use the same amount, because that's going to guarantee you a method mark if it's allocated. So even if you have doubts, use the amount that you have calculated. So we know it's 152,700. But if we look at our list of balances, they gave us SARS income tax, provisional tax payments over here as 130,000. Okay, so guys, these are your provisional payments. It's basically an asset. So you've paid 130,000 Rand so far. However, according to the information and our income tax, the tax expense is actually 152,700. So that means you still owe SARS an amount of money. Now, the liability part is what you still owe. So we're going to say here, it's going to be a separate amount. So we're going to say income tax, and then we're going to say 152,700 minus your provisional payments were only 130,000. And we'll do the calculations just now, but I'm leaving this here so you can see what the sum is so long. Okay, so that gave us income tax. Now we'll get to the loan. Now remember guys, automatically if you see loan, you'll know that a part of it will be a non-current liability and a part of it will be a current liability. So we can say here long-term loan, and over here short-term loan. Now guys, remember the long-term loan is the portion of the loan that's due past 1 year. The short-term loan is the amount that you're going to pay back within 12 months of today, which is the 28th of February 2022. So they gave us information regarding the loan over here. Everything has been recorded. Interest is 142,250 capitalized. A fixed monthly installment has been paid in full, and the capital portion of the repayments will increase by 10% over the next financial year. Okay, so now we are going to go up and see what's happening with the loan. So here's your loan. It was 1,280,750 and it's now 1,159,000. Now guys, please remember this 159 over here represents the total amount that's owed on the loan on 28 February 2022. But when we break it down in the balance sheet, we must separate the current portion or the short-term portion and the long-term. And these two answers together, this one and this one, must essentially add up to 1159. So we're going to have to do some calculations here to figure out what to do. So firstly, guys, please remember this 128750 and the 1159. These are the amounts of the capital portion of the loan. It means it's the total part of the loan. It does not include interest. The interest gets worked out on this every year. So this is only what you actually owe. It excludes any interest. So if we want to know how much they've paid back of the loan in the past year, and I'm going to do this calculation down here so you can see, we're going to say 1,280,750 minus 1,159,000, and that gives us 121,750. So guys, that means in the past year you paid back 121,750 rand of the loan. Now they also told you the interest on the loan. They said interest on the loan is 142,250. So if I put that and I add them together, if I say 121,750 plus 142,250, I get 264,000. This 264,000 is actually, I'm just going to make sure you guys know, loan. This 264,000 is the total amount of payments that you made throughout the year. So if you say 264, 123, and you divide it by 12, you'll get a monthly repayment on the loan of 22,000 Rand. So now you know how much you're paying per year and per month. And you also know this is the capital repayment part. So the difference between these two amounts is interest. And we know that because the interest was given. So now, guys, one thing to bear in mind, this 264,000 will remain the same every year. Every year, you'll pay back 264,000 Rand. Every month, you pay back 22,000. However, the amounts that will change represent this one, your capital repayment, and the interest, which is 142,250, because interest on the loan is calculated on the capital balance. And the capital balance, guys, is this amount of 1159000. So that means every year, because you're paying back a certain amount of money, the interest becomes less because the capital amount becomes less. So please note, the 264,000 doesn't change. What does change is the 121,750 and the interest of 142,250. So this amount will actually become more every year, while the interest will become less, because interest is calculated on the outstanding amount, the outstanding capital amount, and because that becomes less every year, so does the interest. So now that we have that, we can go a bit further. They're telling you the capital portion of the repayments will increase by 10% over the next financial year. So guys, that means this is the amount that they're going to pay back, or rather that they did pay back during the current year. So what's going to happen next year? Next year, it's going to increase by 10%. So now we're going to say 121,750 multiplied by 1,1, which means next year's capital repayments is 133,925. So that means, guys, what are you going to pay back of the loan next year? 133,925. But remember, you're going to pay back 264,000 every year. So the difference between 264 and this 133,925 is actually going to be interest for next year. So if we want to enter these amounts, you should know your short-term loan is actually equal to what you're going to pay back within the following 12 months. So our answer here is going to be 133,925. And our long-term loan, guys, is actually going to be the amount of, or balance, how much was it? 1159? Yes. So our long-term loan is going to be 1159000 minus what you're going to pay back within 1 year, 133,925. And we know that's going to give us that answer over there. Okay, we'll add up the totals and stuff just now, but let's do the calculations and then we'll plug in everything as need be. Okay, guys, shares and dividends on 28 February 2022, there were 1,150,000 shares in issue. A final dividend was declared on 28 February 2022. Total dividends for the year amounted to 345,000 rand. So remember, guys, this 345 belongs in the retained income note for total dividends for the year. I want to know what the final dividend for the year is, okay, because that's going to be here. So over here, your other current liabilities, shareholders for dividends. Okay, so now let's see if they gave us any information regarding shareholders for dividends. What they gave us here, because there's no shareholders for dividends, they gave us dividends on ordinary shares, but they wrote in brackets interim of 207,000. Guys, the interim is the one that's paid during the year, and it's always paid automatically, so we don't have to worry about that. However, we need to know what still has to be paid. So they're telling us total dividends for the year is 345. So if we say 345,000 and we subtract the 207,000, we're going to get the shareholders for dividends amount that is owed. Please remember, guys, shareholders for dividends represents the final dividend for the year. That final dividend is always declared but not paid, which means it's a liability for the end of each year that we have to pay in the following year. So please remember, the final dividend is always declared but not paid. That's why it's under current liabilities. Okay, and I think we have one more adjustment here, which is the net asset value per share. After taking into account all adjustments, the net asset value was correctly calculated as 675 cents per share. Now, guys, why are they telling us this? Because you need it to complete ordinary shareholders' equity. What comes here? Retained income. Now, the formula for net asset value per share, and we'll just do it over here, is actually going to be ordinary shareholders equity, and we're going to divide that by number of shares in issue. So now we're going to try and do that sum because we already have the answer of 675. And please remember, this formula must be multiplied by 100. That's how we got to 675. And if you have to answer this question in an exam or test, please remember the multiply by 100 because they want the answer in cents. That's why we multiply by 100. So now we have the answer to this formula. We do not have the value of ordinary shareholders' equity. And we have the number of shares in issue because they gave it to us. On 28 February, there were 1,150,000 shares in issue. So we're going to use this sum to figure out what's going on. So we're going to say, now think about it, guys. It's going to be, let's see how we're going to do this. We're going to say equals, actually, let me break it down for you and then you'll tell me how it goes. X divided by 1,150,000 equals, and now it's 675 cents per share, but remember, because of this multiply by 100, we can use 6,75. Okay, that's your sum. So you essentially have to figure out the value of X. Okay, so what are we going to do? We're actually just going to multiply the 675 by 1,150,000. So let's see what happens if we do that. 1,150,000 multiplied by 6.75. 7,762,500. This amount is the value of ordinary shareholders' equity. So over here we can write 77,625,000. So what are we missing? Because retained income plus ordinary share capital must equal ordinary shareholders' equity. So over here, we're going to say 77,625,000 minus 6670,000. And you know that will be your answer. All right. And I think that's about it, guys, because there was nothing else that was needed. And I do think, again, there's 1, 2, 3, 4 entries under current liabilities, but I believe there were 5 lines open. Again, I think this was a mistake. It's confusing, but it's there, so we have to deal with it. Okay, so let's see if we can do these sums here. So we'll just write equals 77,625,000 minus 667,234. And that means retained income is 1,092,500. Okay, then over here, guys, we're going to deal with this sum to get the value of the long-term loan. So equals 1,159,000 minus 133,925. And this is the same value, so you're just going to copy and paste it there. So 102,5075. Now we're going to deal with current liabilities. Okay, so we're going to basically do this sum. So let's see what happens. 428,23 plus, and another bracket, 12,150 multiplied by 2, close both brackets, gives us 452,300. Then income tax, guys, remember, is the amount that we still owe. So 152,700 minus 130. This entire amount here is equal to current liabilities. And if I use the sum function here, 746,925. So over here we write 746,925. And now remember, we'll actually put it over here. Let's write total equities and ability. And now it's essentially 1 plus 2 plus 3. So we're just going to put them in bold so that we know we're looking at these totals. So this one and this one and this one is going to give us 9534500. 953. Did I get it right, guys? This one plus this one plus this one. 9534500. 34500. And that's it. Let me know if there's anything you need me to explain or if there's another question or section that we should do together.